Now let's move the S&P real quick.
No, I got the SPY. That's what I use, and
that's what I mean. It's fine.
Yeah, it's 1/10 of the S&P.
Oh, there it is. So what do you think there, Bakes? How's that look to you?
With the shows I've been doing with Steve Lamar, our other partner, we've been talking about these levels, and now we're taking them out. And we took out this 675 level. We took out this low here, this recent low, the war low, if you will. And now we're taking out the 200-day at 660. And so the next level is 650.85 down here. We'll see how it closes. But given some of the things we've been talking about with the other components, I mentioned 3 components of the Dow, Disney, IBM, and I'm forgetting the other one now, that look god awful. Obviously, big components of the S&P. So they're taking the generals out now, and it's just it's getting bearish. Period.
Yeah, I would agree. David, we're just talking about how gold was having one of its worst days in 20 years, and then and now we're looking at the S&P, which that is not a chart that looks very good. That looks like it's ready to do the elevator move down.
Well, I mean, we've talked about this before, that there's capitulations and then there's downturns, and we haven't yet had. It feels like a capitulation, right? It feels like if you're long the market, it feels bad. But a capitulation is where you wash out everybody and you say, okay, all the bad news is in. It seems like we're not yet there. We're not yet there.
Totally agree. And you know what? The situation that I've been talking about is like, look, equity volatility, the VIX is at like 25. It's, so it's elevated. But, if you think back last year, Liberation Day, you got up to like a 60, 70 vol. And when you have that, then you get a synthetic bid because guys can short puts and lock in like a 30% yield to buy the S&P down 20%. Well, that's a good way to go. Well, what could happen here is if you stay in this like 25 to 30 VIX level, you don't get that, and you get exactly what Dave was talking about, which would be something like 22, where you're elevated vol, but no one can buy puts in order to hedge their book, which is a very popular thing to do. So like right now, the end of this week is option expiration. So there's a lot of guys who have been hedged, and thus the S&P is relatively held in, but you're now losing money both in your assets and your puts aren't protecting you. That's actually the worst case scenario, where we bleed lower. We don't actually get a capitulation. It just, hey, we're down 50 bips, and then you're down 1%, and like kind of what we've seen. And there will be probably at some point a washout, and you look for that. But like right now, that's kind of what I'm seeing in the market is this like slow bleed, and then bombs going off. Sorry, bad choice of words with the war going on, but gold is the latest example, interest rates, etc.
And here's the one thing that I don't want to get too bearish, and I don't want our members to get too bearish. But if a headline comes out, we've cleared the Strait of Hormuz, then these things are going to rip, and so you have to be wary of that and not get too over your skis on the bearish side.
Well, I don't know. I'll take the other side of that. I think that right now what the market's reflecting is it's in our power to stop this entire thing, right? So you would think that overall there should be some encouragement, but that there should be a bottom here, right? Because we know that at any point we could just say, you know what, we've dismantled it, or we've slowed them down, and whatever excuse we want to use, we can stop. But I think the market's reflecting that this is possibly expanding, and that the idea that that the Iranians are being belligerent on, hey, we're going to keep doing this, we're going to that it could expand even further. So I don't know if just clearing the Straits of Hormuz would get everybody to be, first of all, would we really believe it? Like what's the proof that we'll have that, right? Because a couple ships get through, or because I think the only way is if Iran said, well, yeah, we're going to do that, which is not in their best interest to do. So I don't think it's a tough thing to prove. And unless we have a large coalition agreeing to do it, I don't think the market's going to believe that there won't still be attacks. What do you think, guys?